Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
Welcome back to Modern Investing Techniques, episode 96. It's July 4th, 2026, and I'm Patrick in Vancouver. Time to break down today's market setup and find our edge. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Defensive energy exposure could stabilize Canadian TFSA yields as Morgan Stanley rotates into names like Galp amid geopolitical oil stock pressure. The S&P 500 closed at 7,483 flat. The Nasdaq closed at 25,833, down 0.8%. The TSX Composite closed at 35,247, up 0.8%. Sentiment reflects mixed signals from U.S. political events and Middle East oil dynamics. The Fed faces an upcoming collision with the new chair over rate policy that is already priced into defensive sectors. Recall our MDA satellite acquisition play from 2 weeks ago that closed down 11.8%. A reminder that M&A catalysts need volume confirmation. Earnings season continues with data center names reporting long-term contracts. Portfolio performance data against the Nasdaq is unavailable in today's briefing, so we focus on the index levels provided. Sector rotation into defensive energy names works by shifting capital from high beta growth stocks into producers with stable cash flows and lower correlation to broad equity declines. Today's Morgan Stanley upgrade of Galp highlights how European energy can act as a buffer when U.S. indices wobble on rate uncertainty. Implement it by screening for upgrades on platforms like Wealthsimple or Questrade. Then allocate 5 to 10% of a TFSA to an ETF such as XEG while monitoring the 20-day volume average for confirmation. This approach performed best during 2022 to 2023 rate hike periods when growth stocks lagged but energy multiples stayed depressed. Risks include sudden policy shifts that can erase the defensive premium quickly. Always pair the upgrade signal with same-day volume above the 20-day average before committing capital. You can start by running the screen in Wealthsimple and saving the results as a custom list. If the volume filter clears on a name like Galp, you move a small sleeve into the ETF that same day. This keeps the tactical exposure limited while capturing the lower beta buffer. This is a simulated trade for educational purposes only. No real money is involved. Today's pick is none. We are monitoring a setup in energy. The catalyst is the Total Energies CEO noting Middle East producers desperate to sell stockpiled crude amid shipping constraints. The technical setup requires watching for RSI on XEG to dip below 40 combined with volume above the 20-day average. Risk assessment shows no entry until closing price confirmation per Rule LL054. Maximum acceptable loss remains undefined until the trigger is met. Confidence level is low because only a single catalyst is present without volume or technical alignment. This no-trade decision demonstrates how to wait for 3 aligned factors before committing capital during a cold streak. Listeners learn to define explicit trigger levels rather than chasing incomplete setups. Energy is the preview sector for next Monday because it avoids recent sector concentration while offering defensive characteristics. Last week's completed hold data is not provided in today's briefing, so no specific P&L can be reviewed. That outcome reinforced the need for volume confirmation on M&A deals. The lesson is to require closing price confirmation before acting on acquisition news. Interactive Brokers TWS API lets Canadian investors pull real-time options chains and set automated alerts for volume spikes above the 20-day average directly in their TFSA eligible accounts. It gives an edge by replacing manual scanning with scripted checks that flag setups matching our valuation plus volume rule in under 30 seconds. Active DIY investors on Questrade or Wealthsimple can migrate a small sleeve to test it at the Pro tier for $10 monthly. The Wealthsimple Trade Screener now includes European energy names with upgrade signals and 20-day volume filters that retail users can save as custom lists. It delivers an edge by surfacing defensive rotation candidates without needing paid terminals. Intermediate TFSA holders should enable the free advanced filters and set daily email alerts for Galp-style upgrades. Continental sells ContiTech to Lone Star funds for €4 billion. The industrial supplier divestiture frees capital that could flow into higher margin segments. Add MG on the TSX to watch list for any follow-through volume above its 20-day average this week. The transaction targets the ContiTech division specifically according to the reported deal terms. Continental shareholders may see proceeds redirected toward core automotive operations. No immediate price target revision has been issued by covering analysts. The divestiture size reaches €4 billion, exactly as disclosed in the announcement. Micron signs long-term customer agreements worth $100 billion. The memory maker's backlog provides visibility that supports steadier growth multiples, even as broader tech faces rate pressure. Trim any existing MU position above 3% of TFSA if it closes below its 50-day moving average. The contracts cover extended supply periods that reduce earnings volatility. Micron management highlighted the agreements in the latest earnings commentary. The $100 billion figure represents cumulative committed revenue. Position sizing discipline remains essential given the sector's historical beta to rate moves. Rocket Lab announces $8 billion satellite acquisition. The deal expands the space launch company's addressable market but requires careful position sizing given execution risk on large M&A. Hold CAD cash with no rotation signal yet until closing price confirmation on RKLB. The target is identified as a satellite operator that broadens Rocket Lab's service offerings. Integration timelines extend beyond the current quarter according to the release. Execution risk stems from the scale of the $8 billion transaction. No volume confirmation above the 20-day average has appeared on RKLB shares yet. Total CEO flags Middle East oil stock sales pressure. Constrained gasoline inventories from shipping worries could support near-term energy prices despite producer liquidation. Avoid adding Canadian RET exposure this week and favor energy ETFs with defensive tilt. The comments came directly from Total Energy's leadership during an industry call. Shipping constraints have created visible inventory buildups at several terminals. Producer desperation to liquidate stockpiled crude appears concentrated in certain Middle East locations. Energy ETF exposure offers a lower beta alternative to individual names during this period. Portfolio performance data including win rate and cumulative alpha is unavailable in today's briefing. We will report those figures once the next update arrives. Now here's something that most retail investors get wrong, and it cost me money before I figured it out. Imagine you bought XEQT last week when the TSX posted modest gains. Your order filled at the market price, but here is what actually happened between your click and that fill. The ETF's underlying mix of equities and bonds rebalanced internally as global equity weights shifted 0.4% that day. Modern portfolio theory shows that combining uncorrelated assets like Canadian equities, US large caps, and bonds moves you closer to the efficient frontier, where expected return stays the same while volatility drops 15 to 20%. Strategic allocation sets long-term targets by risk tolerance, while tactical shifts of 5% or less let you respond to events like today's energy rotation without overtrading. Bonds still reduce drawdowns post-2022 because their negative correlation with stocks reappears once rate volatility subsides. Age-based rules like 60% equities at age 40 are oversimplified. Instead, run a quick risk quiz on your broker's platform and set a 5% threshold for rebalancing. The biggest mistake with asset allocation is ignoring correlation drift after a strong equity year. Instead, always review your XBAL or VGRO holdings quarterly against target weights and rebalance only when any sleeve drifts beyond 5%. Before we wrap, open your brokerage screener tomorrow and filter TSX energy names for upgrades in the past week and volume above the 20-day average. That's your modern investing techniques for today. Every episode makes you a sharper investor. Subscribe, leave a review, and we'll be back tomorrow with more market intelligence. And if you'd rather watch than listen, find us on YouTube at Nara Network. Links in the show notes. And before you go, this show is part of the Nara Network, a family of daily podcasts on tech, science, and markets, each one a short, sharp briefing you can finish on the commute. If today earned its place in your feed, here's your next listen, SpaceX Daily, the daily companion for following SpaceX as a public company, from Starship to the stock ticker. Find every show free at naranetwork.com. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you didn't laugh?